What's up, folks? It's Eric from Option Edge. In today's video, I want to show you how I am hunting for bullish entanglement and what that means. So right now I am in my pattern finder charting software, which uses AI to map out different patterns in the software. For example, it's got some cups and handles mapped here, congestion lines, trend lines, etc. And then also plots the percentage from the above trend line and percentage from the downtrend line here. So it also does, it screens and looks for breakouts in different stocks. So if we do a stock screen, I want to look for bullish charts nearest to the congestion or trend line. So let's do that. And what we get is we have a couple different names here. I know Zscaler is a pretty good growth stock. So let's go ahead and take a look at that one. So as you can see, it's made a break above this here congestion line, and it is heading, let's turn this off, it's heading to the line above, and you can see that it is got more room, about 18% to the upside versus the 10% to the downside. So the next step from here is to evaluate it using some more AI tools. So let's go into CML Viz's ChatGPT finance tool. We're going to say, what is the current sentiment for Zscaler? What is the current sentiment for ZS, and see what that spits out. All right, so here we go. So based on the news has been somewhat bullish. It gives the news a bullish score of 70. Okay, but then if we look at the sentiment score adjustments over the last 30 days, the volume on up days is 4.3 times higher than it was on down days. That's something bullish. And then the 3-month relative strength is 94 out of 100. So they give the final sentiment score an 83 out of 100. So that's pretty bullish. So that checks out. So we have something here. So let's keep going. The next thing we're gonna do is ask this tool how the returns are compared to the broad market. How does ZS compare to the market? And let's ask that. This is going to spit out different statistical measurements like skewness and kurtosis, which is a measure of the fatness of the tails of a probability distribution. So let us look here. So over the last 3.5 years we have an outperformance, kurtosis outperformance of 27, and then we have a underperformance of 9. So that's pretty good. And then the upside skewness is double almost than the downside skewness. And you can see, the return has been a lot over the last couple of years, so that makes sense. But let's look over the last 123 days. How has it been? So the outperformance has been much larger than the underperformance. That's great. And then the skewness has been almost 3 times the amount of the downside skewness. Let us go into our option backtester and see if we can find a good strategy for this stock. But before we go, I just want to show you another thing. Right here we have the daily returns. You can see each green line is the upside return versus the red line is the downside return. This is 3.5 years, and then this is the 1 year mark about. So this is measured on the daily time frame. So when we choose our option strategy, we're going to use the closest thing to a daily expiry, and that's going to be the weekly expiry. So let's go into our software. So let's go ahead and put in Zscaler and see what we get here. So if we look at the last 6 months, let's go back to the chart. So growth stocks over the last 6 months have sort of bottomed out. This continued to fall after January 1st into the new year, but then once May hit, it bottomed. So if we look at the last couple months, this has been on a tear. So hopefully with some different option strategies, we can capture that. So if we go back into our options backtester, you can see that selling a 40-30 delta put spread has been very profitable. $4,000 return if you were to sell 5 contracts every week for the last 6 months. That's not bad. So let us also see what would happen if we were just to buy a call. You can see buying a call was also a very good strategy. The win rate isn't as high, but nevertheless, the returns are very good. But not quite as good as the put spread, which is interesting. So that's the value of selling a put spread, selling something that is out of the money a bit. You'll still make money even if the stock doesn't move. And then lastly, let's check out how the IV smile is on volatility gecko. I called it volatility gecko. It's market chameleon. So we're going to go to skew here. Let's check out the IV smile graph. And so one of the things about this is, okay, so you can see that basically the options to the downside and to the upside calls, so this is the downside puts, this is the upside calls, are fairly evenly priced, even though we have that upside kurtosis and that upside skew. So in a way, the options market isn't pricing in that that skewness. So this is good. We can benefit from it. And yeah, that's basically it. Selling a out of the money put spread, the 40-30 deltas has been over the last just 6 months has been a pretty profitable strategy. So I might try this myself, especially now that it is in a very bullish, especially since the chart is extremely bullish. That's it. Peace.